Nicole take his snacks away. No food.
Wait, type 1?
They eat in here all the time.
We don't eat in here.
Oh yeah?
No food in the studio. What do you think? This is your car?
I just see you.
No
Scorpio.
problems.
They eat in here every day.
I'm
And then they
Scorpio
clean up.
Sag, believe it or not.
They're fastidious.
You're a Skag.
They're very
Yeah,
neat.
looking good.
Feeling good.
Test,
How's the
test.
summer?
Anybody need anything?
Look good.
I'm fit.
Yeah.
So, Jeff Bezos buys CNBC. Good for me or great for me?
Great for you.
It is, right?
Yeah. I think
Why do you? Why do?
I
All
think
kidding
you'll get a
aside, do
trip
you
to
think
outer
that?
space.
I don't want that.
Oh.
Don't you think he would?
I'll get it.
Sorry, man.
Oh wow. Wow,
It's a
wow,
piece of a
wow.
mint.
He was in his mouth.
Josh just spit food on the table.
Not food.
I
It's a
called
mint.
the
It's a
kettle
mint that
black.
doesn't count. I feel like he would like me if he like flipped on the channel for an hour. He'd be like, "Who's that guy? Keep that guy."
He would love you,
Did you get it?
especially on maybe he'd get you a new jet ski.
Isn't that a genius acquisition for him?
Yes.
Why? I don't get it.
It's the world's leader in business news.
Right.
It's the channel is on everywhere in the world.
Why should he own it?
It's a message because
So-
it's a messaging
because somebody
platform.
should own it, and it's not exactly selling at the highest ever valuation, right? And no
It
cable
peaked.
TV news is.
Right. It peaked. So.
Do you know what the price tag would be? Take a guess.
Well, I think there's last I checked, it was $1 billion plus in revenue.
Well, it's combined
As
with
part of,
Golf Channel,
yeah.
All right, so $1
MSNBC,
billion plus in
NBC
revenue.
it was
News.
doing
what
$1
does that go
billion
for?
plus in revenue 5 years ago.
What does it go for? 2 or 3?
I think on that type of thing, audience, 5-time multiple. I would say. Wouldn't you?
So Caleb was like a heavy at CNN money. Do you know about that?
Yeah.
And CNN. What was your title there?
Executive producer.
Executive producer.
But I'm known for putting Josh Brown on the air.
Is that the greatest thing you
Really?
did the whole time?
Yeah, that was it.
Maybe Howard
I
Lindsay,
peaked.
not me.
I peaked.
Putting Howard Lindsay on television was a big step for
Yeah,
you.
I peaked.
At Future Proof, you brought who's the food guy you brought? The
Chef
big deal.
Kwame
No, no,
Machi,
no.
I did at the last Future Proof.
No,
citywide.
in California.
Chef Jose Andres.
Yeah,
And you know who we're having this time?
I don't.
Colicchio.
Who is
Oh.
that?
Tom Colicchio.
Wait, how did you get him?
Because I arranged it. Are we rolling?
I don't know the food
I
scene. Who
arranged
is
a
that?
deal. Tom
Mike-
Colicchio is 11 Madison Park, Food
Oh.
Network, top. You see, whatever you do.
So have
Google
you,
him. Duck, duck, goose him.
COLLICHIO.
So you know I have a
Okay.
brain defect. When people like tell me numbers and letters, I can't. It doesn't.
Oh, all right. So just vibe code
All
it
right,
into
say,
this.
say it slowly. What is it? Yeah.
COLLICHIO. Tom Colicchio.
Okay.
Yeah.
Oh, there it is.
What
Well,
was his restaurant in
he's
Park,
involved.
Park South in the
11
involved.
Madison
20s?
Park.
Was
And
did
he
have
was
some
part
co-
of Gramercy Tavern with Danny. He's a
And he has a cooking show with Martha Stewart right now
Yes,
on
he
one of
does.
the streamers,
Yes,
which
he
I
does.
watch.
yes, he does.
What the hell is that called? It's pretty good.
have you been to the? It's Jose Andres.
Yeah.
Have you been to the bar at the Ritz?
Yes, upstairs
Sick.
and downstairs.
I've
And the
signed-
restaurant's very good too.
And Zaytina?
Zaytania.
Have you been there yet?
Yeah, I ate there.
It's quality. I like
Oh wait, upstairs.
Nope,
No,
I ate at the
that's the
lobby
lo-
restaurant. I haven't been
We
to the bar
have to go to
upstairs.
the bar. It is so sick. I
the,
tried to
the
go.
best rooftop bar,
Dude, it's the best thing I've ever seen.
vibe-wise.
He owns all the restaurants in that
It's
building.
like a licensing thing with his name.
Mm.
But I think he owns Zaytania. He's the chef owner.
I tried going last week with Chris. They wouldn't let us in.
So
Dress code.
Let me know. Oh,
The
dress code?
bazaar
Or
is
you
the
guys
bazaar
know?
is really good.
The bazaar.
I've been there. I
Yes.
really
That's
enjoyed
downstairs.
No,
it. Yeah, I
that's
think so.
second
Or that's
floor.
a different location.
Second
possibly.
floor.
We have to go to Res. It is so
That's high
sick up
end.
there.
This is at
So I did a deal with Qs. The Qs are deep in the chef space.
Like the Nasdaq cues.
Yeah, QQQ.
Okay.
Invesco QQ. They're deep in this. They love fine food and wine.
Oh,
Fine
they're
food.
deep in it, like they're into.
They're into chefs. They have this video series called Recipe for Innovation, which is awesome, where they have a chef, Jose, Tom, Kwame, make recipes based on the components of the Qs. Pretty good idea, actually.
Really?
Wait, explain. Like
So they'll say, all right, chef,
Apple.
They put
Chef
GPUs
Mike.
in the salad.
Chef Mike, Airbnb, Honeywell, and Starbucks, go. Make me 3 dishes based on those companies. What inspires you? Airbnb, air, water. Maybe I'll do mussels with a foamy seaweed, that,
Got it.
right? But I think it's pretty
Yeah,
smart.
yeah.
It's like,
Honeywell,
it's
obviously.
yeah, it's a,
We'll cook with honey.
it's a way to illuminate the components of the cues in a content marketing way, but it's shot like Chef's Table. It's gorgeous. And so they had this thing, and they're like, we have this beautiful series. We paid millions of dollars to do. We pay these guys are on the payroll. We can't get traffic to it. They put it on our ETF channel on Investopedia and on Food and Wine, which we own with Dot Dash Meredith. And they're like, you, Caleb, have a presence at Future Proof. what can we do? And I've been talking to Matt for a while about bringing one of our other brands like Travel and Leisure or Food and Wine to Future Proof with a sponsor. And this was the one that took. I was trying to get like United and Travel and Leisure. I was trying to get and then this came in. I was like, got it.
Are you excited?
Yeah, I do. This is be our third.
Wait, did Jose Andre cook something
Yeah, we
last
did,
year? I didn't get to see
There
it.
was a ton of people watching.
Yeah.
You had a full house.
Yeah, we did. You can't cook because they're uptight about it in Huntington Beach.
You can't he can't
can't-
like fire up a stove.
No, you
Okay.
can. No, in Miami it's a little bit different.
Okay.
But you can have and also they have a tight catering situation in
Yeah,
Orange
yeah,
County. Like it's all locked up there. So we did. He has his own tinned fish, mussels and sardines, and potato chips.
Okay.
So we did fish and
That
chips.
sounds disgusting.
It was freaking awesome. And I bring the wine editor from Food and Wine to serve free wine drinks. So we do a conversation about innovation, food, his empire, wines that go with the food, and I put it all together into an advertising campaign on our sites, and then this live activation experience at Future Proof.
That's
Very
a great
cool.
that's a great package.
Yeah, it's good.
And you know what's cool for the people at Future Proof that are watching financial stuff all day? It's like a refresher.
Yeah, and
like
it's a palate cleanser.
Yeah.
literally.
Here's something relevant to you, but not
Right.
more
And we're-
fintech.
And we're not we're not jamming the cues at them. We're giving them recipes.
Yeah.
Literally, here's the recipe. That,
Quiche, 5 foods that start with the letter Q.
Yeah.
Wait,
Yeah.
you wrote a
That's
book?
it. Quinoa.
Yes.
Holy shit. We should talk about it. We should talk about it.
So I don't think I told you this yesterday. I want to save it for the show. Maybe I
Yeah.
didn't tell you this.
You
That
should
book is going to live much longer than Just Keep Buying, which was a smash hit. Just Keep Buying is one of the best-selling financial books of all time. I don't need to tell you
On the
that.
Inside, left and right.
Okay.
Mhm.
It's done well. I mean, it's better internationally.
Dude,
It's done well.
Of all time.
Well, what a response. He goes,
Yeah, what the Dude, we're on a podcast. Have fun.
Be like, thank you.
Yeah.
No, I appreciate it. I appreciate
No,
it.
it
It's
goes,
very nice that
that's
you're
a
saying
better
that.
book than the fucking Bible.
No, but-
and you're
no.
like,
You're like,
huh.
Yeah.
But do
A
you
little more,
suppose so.
a little more data.
Yeah, what's
Do
your
you,
lunch?
do you agree? Like, Just Keep Buying was great for what it is. The wealth ladder is so much bigger than that. Like, people will give that to people at all ages, at all areas of the wealth ladder, if you will.
Yeah, I think that was the point, right? Like I Just Keep Buying was supposed to be my like, hey, if I don't know anything about you, here's what I give you. Here's my financial advice. And with the wealth ladder, I said, hey, that's actually not correct, right? Like for people that are just starting out, you got to have a different strategy. And for people that are trying to get super rich, that's
But it doesn't,
buying the
it
S&P
doesn't
500.
invalidate the first book.
Well,
it
of course
builds,
not,
it
yeah.
builds on it.
It's a different thing, right? It's like, where are you trying to go and why? And figuring out the right strategy is more important.
One of the
there.
things that you've done very skillfully in selling the first book, and I would imagine you're going to repeat the playbook, you just do every media outlet possible. And that way, during this 4 to 6 week launch period, every day there are people talking about your book to their own, like, some of them are big audiences, some of them are micro audiences, but it almost doesn't matter.
Doesn't matter.
Because if there are sales taking place on Amazon of this book each day, even if it's 3 books today, they're keeping you high in the algorithm.
Dude, you know what?
Yeah.
It's
It's
not
very,
very books.
very wise.
You know what his genius is? On the first day and on the second day, he buys 10,000 copies each day to boost the
Well,
rankings.
no,
That's
a,
genius.
that's a thing.
That's
that people
genius.
do that.
I think so the algorithms changed a lot.
They don't let you do that now.
Yeah, so that's one of the issues. You can't if I go and buy a bunch of books, that's not the same as a bunch of separate orders, and they take that into account in the ranking.
Yeah, bulk.
New York Times takes that into account with their bestseller list and all that. So it's got to be much more broad based. And people have tried to game this, but I don't.
Scaramucci
Yeah.
told me, like, he put out like the little book of hedge funds or whatever. He's like, if I told you how many thousands of copies of this thing I have in my basement, you wouldn't believe me. But I'm telling you, it's actually even more. But that's another era. Now I think the algos.
Can
know
I
what's
make
up.
another recommendation?
Yeah.
Go around to like the asset managers who have the new associates or the interns and be like, I would love to talk to your team about building wealth for 45 minutes. I'm going to bring a book. Can you buy 20 copies? And we'll give them away and I'll sign them for the kids. And I do this all the time, not to sell books, but just to get us out there, like a Trojan horse to get us into these firms. And you can literally give a step-by-step or a nice talk and take Q&A, but they'll buy 20 books as part of the deal. No talent fee, just buy books.
Yeah, I mean, I prefer the pot. I appreciate that method. I think it's just kind of tough because I work. I have a job
Wait,
I have to do.
Yeah, we don't want him doing that
So,
shit.
wait.
A 30-minute podcast I can do virtually.
You know
is
he's the
easy.
chief
Yeah, like, they
operating
don't want-
officer of the firm.
On Sundays. I was talking
If I
about
could do it on
Sundays.
a Sunday, like but I'm like, I wish I could just go in. Like,
Caleb has a great idea for you. Are you familiar with the term sabbatical?
Yeah.
We're actually extraordinarily busy this summer. We can't have
Yeah.
Nick doing
Actually,
hand-to-hand combat.
I was asking Nick the other day. I said, it feels like we're busier than we've ever been during this time of the year. Can you pull up X, Y, and Z? And sure enough,
Yeah, the horse race chart shows that, or
we
the
stole
Netflix
we
chart,
stole
whatever you
this
call it.
from Netflix. Netflix used to report their numbers cumulatively year by year. So they would compare
Yep.
where are you in 2019 in April, January through April versus 2018, 2017. So we started doing that. And it's a really effective chart. It tells you all you need to know.
Yeah.
I mean, a lot of what you need to know. So anyway, Nick has a real job and he's very good at it.
We're gonna talk about the wealth ladder once we get into the meat and potatoes here.
I'm going.
Everybody settled?
naked.
Everybody ready for this?
No.
Cool.
Yeah.
My box.
You causing a disturbance, Queen?
Come on, friend.
You see what I did to the slate?
201.
Today's show is sponsored by Public. Public is the investing platform for those who take it seriously. You can build a multi-asset portfolio of stocks, bonds, options, crypto, and more. You can also access industry-leading yields like the 4.1% APY you can earn on your cash with no fees or minimums. What sets Public apart? AI isn't just a feature, it's woven into the entire experience. From portfolio insights to earnings call recaps, Public gives you smarter context at every touch point. Fund your account in 5 minutes or less. Check out public.com/compound. Paid for by Public Investing. Full disclosures in podcast description. Oh, I love that.
That was a really
Well
nice
done, Caleb. All right.
What's in the box?
I have a gift, but when the time is right.
Ladies and gentlemen, children of all ages, investors, traders around the world, it is my pleasure to introduce you to episode 201 of the world's greatest investing podcast, The Compound and Friends. All right, John is here, Daniel, Duncan, Nicole, two very special guests, repeat guests. Some would call you guys returning champions. I definitely would. Ladies and gentlemen, directly across from me, Nick Maggiulli is the creator of Dollars and Data and the Chief Operating Officer at Ritholtz Wealth Management. Woo!
Thank you.
All right. He also just released his latest book, The Wealth Ladder, Proven Strategies for Every Step of Your Financial Life. He'll tell you all about it. And another returning champion, Caleb Silver, is the editor-in-chief at Investopedia. Caleb is frequently featured as a markets, economic, and consumer trends expert on NBC, MSNBC, CNBC, Fox Business, and many more. Caleb, so great to have you back. Thank you very much for being here.
Thank you for having me. I want my own air horn, though.
You're going to get one. First things first, let's just get this out of the way. Nick, you got married this summer.
Yes, I did.
All right.
So
Like within the last few days almost.
within like a month ago.
Okay.
Yeah.
We have a picture. The white tux jacket definitely plays.
My wife selected that
I
for me.
love
so
That
I
is
can't
smart.
I can't love it more than I love it.
That's tough to pull off. You did it.
But he
Oh,
did
yeah.
it with the bow. You need the bow tie with that to really do the whole thing.
yeah, she wanted everyone to wear white, and then so like all our friends like, "Are you sure?" We're like, "Yeah, she wants that." So that's what we did. We all
Okay.
went white, and we did a courthouse wedding.
I was gonna say,
Yeah.
is this City Hall?
Yep, went to City Hall, did it. It was great. We were the last like session of the day. The last one is quick. You go in there, and like literally someone from the state comes in. It's less than 5 minutes. Like, do you take yes, okay, sign this, whatever, and then you're married.
Did you get your marriage license from City Hall? Did you do that with Robin?
No.
Did you do that?
I don't think I did that. I don't
I
even
did
know if I'm
that.
official.
So we lived
25 years
You might not
later.
be married. We went down
Surprise.
to City Hall to get the license.
Did you take a rabbi?
Which you had? No, we didn't get married there. We just got the license, but there were people getting married there. There was a whole hallway filled with brides and grooms and some of their family members waiting to get married. Okay, so that was a cool way to do it. Who are all those people on both sides?
Some of my friends, some of her friends, and then a lot of her cousins. So it was very Albanian wedding. So a lot of her family was there.
My
I
cousin
love
with
it,
the stash.
Yeah.
rules. I love that guy.
Congratulations. We're so proud of you.
Thank
We
you.
knew you'd find the one. You definitely have. She's awesome.
Yeah,
All right.
she's a great lover.
You feel any different?
No, it's actually, things are better. Things
Wait,
are
did
even
you
better.
say she's a great lover?
No,
Shout
she's
to
great.
that.
I love her.
Oh my God.
No.
I hope she's a great lover too. Bonus.
She's great. Love
We
her.
both heard the same thing.
Yeah, Nick, I want to
Wow.
double click on that.
Wow.
Let's do it.
Talk
No,
about
so
it.
do an instant replay. Have them go back like 15 seconds. She's great. Love her.
Okay. We're very fortunate. All of our wives are great lovers. All right. So I'm really proud of you. Congratulations. Hard pivot. Is Opendoor stock market manipulation? What do you think?
What isn't?
I'm not going
anymore?
to accuse a person of stock market manipulation in this
No.
case. And we'll tell the story why we're asking the question. But it looks like manipulation on the surface. It just might not be somebody deliberately manipulating it because the crowd is doing it.
It
And
is. It is not stock market manipulation.
You say it is not
is
stock
not,
market
absolutely
manipulation.
not.
Why not?
Who has inside information?
What inside information and market
Okay, hold on.
manipulation are two
Hold
different
on.
things.
That's one of a component.
Disagree. I can manipulate something with no inside information whatsoever.
Okay, so what is Eric Jackson was at the center of this. But hold on, I just real quick. Before we get to is it or is it not stock market manipulation, the only way that you have this type of mania, because it absolutely is a mania, is with a really healthy bull market with lots of euphoria. And before we got to this stage of the market, you had a textbook rally, exactly what you wanted to see. So Chartkin made this chart. We stole this from Duality Research, who is just putting out killer content. So what we're looking at is, for the listeners who are not watching, and you should be watching, the rolling 78-day change. Why 78? That's the bottom. In the Goldman cyclicals versus the defensive index. And you haven't seen this type of advance, this type of spread, which is 29%, since the bottom in 2009. So you are seeing the leaders leading, you're seeing tech, communications, industrials, financials, and what you're seeing lagging is the opposite. It's staples, utilities, healthcare, real estate. So this is a very, very healthy market in which led to a lot of excess, which we are living through right this second. We're hitting all-time highs. All-time highs in and of itself does not signal excess, but a lot of the behavior that we're seeing, Opendoor, which we're about to talk about, is a result of a very healthy market that is now turning unhealthy.
Okay, so here's the heart of the issue. Eric Jackson's a friend of the show. We've had him on the show, not recently, but he's been on multiple times, and he's been around for 30 years. He's a real guy. Hedge fund manager, has been involved in activist campaigns at Yahoo. He's a known quantity in the media. He came on our show 3 years ago, 2 years, 2022.
The reason why this was possible, this Opendoor mania was possible, is because Eric was on this show talking about Carvana from the business point of view.
It was a dollar stock.
It was a dollar stock and it ran to 150, whatever it did. So he had the credibility. So when I saw this tweet, I thought, hey, maybe I should just put a couple of grand in there. Just see what happens.
You should have. Turns out you should have.
Just see what happens.
So Eric came on our show and said, "You guys everyone's overlooking Carvana. This
Epic
is not
call.
this there's a lot of short sellers in it, but that's not the reason I like it." He said, "I actually think it's a good business," and they threw it out with the rest of the excess of 2021, and the stock went from $1 to whatever. It's a monster stock now, one of the biggest winners of the last 3 years. So a lot of people remember him.
$330 today, and it was a little bit
$330. So the type of gain that you will never see anywhere. So he tweeted on July 14th, over the last month, my X impressions have exploded, talking about BTQQF, I don't even want to look that up, IREN, and CIFR, because everyone is looking for the next Carvana. We think we just found another. At EMJ Capital, that's his fund, has taken a position in Open, and we believe it could be a 100 bagger over the next few years. Here's why. And he did a whole thread, and the thread is mostly focused on the fundamentals and comparing the situation with Opendoor to Carvana a couple of years back. Again, nothing wrong there, I think, because he's saying he bought it. That's number one. That's number one. So, right? He's like, I bought it, I own it. Okay, good. Number two, he's laying out a fundamental story. He's not saying, hey, everybody, tell your friends, let's move the stock. So, that being said, this is pissing a lot of people off.
What's different about this than Roaring Kitty doing his own fundamental analysis on
Well, they accused him of manipulation too.
Right, but
How about this?
Never convicted.
What's different about this than when David Einhorn goes on stage at Irish Selling?
Nothing. He's got a bigger stage and talking to wealthier people. But this guy's respected, obviously. You've had
Three
him
things
here.
are different. Three things are different. Number one, it's a dollar stock. David Einhorn doesn't do that.
Okay.
All right.
Yep,
Right?
fair.
Okay. You can move it. You know what you could do to a dollar stock. Anyone, Roaring Kitty.
Correct.
Anonymous.
You're right.
Okay.
You're right.
Number two, heavily shorted. Now, some would say tough shit for the shorts. Overstayed your welcome. You had a stock go down 95% while you still short it. Totally legitimate. But still, when you do something like this, when you say 100 bagger of a dollar stock, you know it's going to 10. You know it's going to 10 if you have any influence whatsoever.
So let me ask you this, because fine.
I didn't even tell you the third thing.
Fine. What is it?
The venue. It's not the Irish Own Conference. It's fucking Twitter. And the regulators just do not like people using message boards to move. Even if you have the best intentions, for whatever reason, it's different than standing on stage at Lincoln Center at the Irish Own Conference.
But market manipulation is illegal, right? Hard stop, whether it's inside information or text or pump, whatever it is, that's illegal. I'm not a lawyer. What about what Eric did crosses the legal line?
I don't believe anything, and I don't believe that the regulators actually care so much about this type of thing
These
anymore.
days, probably not.
Probably not.
Yeah.
So this guy's using his loudspeaker. He's using his platform, X in this case. He knows who he's talking to. He's got 68-some thousand followers. He's done it before. I don't see any difference between this and Carvana. This company loses a lot of money, and it's in a pretty tough sector right now. But this is his own research, and if people want to follow, they follow. But you know what's also different is we're back in that 2021 phase where everything's melting up, right? It's like a soft serve ice cream cone with sprinkles on top. Tastes good for the first couple bites, and then you get to the middle and you're like, what am I actually eating?
Put this chart up. This is Opendoor 1 year performance. We'll wait for it. Here it is. So it got to as high as almost 3.5. And again, coming from like sub $1. And I think what would really seal the deal is if like Eric blows it out now.
What sells? He's not selling.
I don't think so. Because I think Eric legitimately likes the stock.
He does. Now, I would also say
But that would be very. We agree that would be very bad.
I absolutely understand why professional investors absolutely hate this, because it feels like cheating. It feels like a shortcut. It feels illegitimate. So I fully understand. But at the same time, I don't think he did anything wrong.
Well, so I don't either. I'm just pointing out the things that people dislike.
Yeah, I get it. I would dislike it too.
People, including regulators.
Dude, if I'm a hedge fund manager and I'm competing against him, like, this is just not fair. It feels like you're cheating.
And then you fan the flames of social media on Wall Street Bets and wherever else, and this is what you get. This is where we are right now. So you can hate it, but welcome to investing.
I mean, why
in
is it
2025.
cheating? Just because he has an audience? Is that cheating now? Like, where's
Yeah, I agree. I agree with that
argument. And like, maybe that is, but like, he has the audience for some reason that this hypothetical hedge fund manager doesn't have.
It feels cheating in the same way that when Kim Kardashian backs a company, or Sydney Sweeney in this case, that's the way the world works. The audience is the most important thing ever. That's it.
He put an $82 target on it. Quote, in a few years was the last tweet in the thread. I think that's the other thing that bothers people. He's arriving there on the fundamentals. He's got a reason for 82. But again, a $2 stock going to 82 is like miraculous.
It's like Bitcoin.
Yeah, even bigger than I. And I'm not saying it won't do that or it can't do that, but I think when you say that out loud, that's the same thing that pisses people off about Cathie Wood when she says her base case for Tesla is $5 trillion.
All right, so
Like,
look what happened.
People don't like that.
Well, but what people also don't like is when it appears like you are doing this for your own benefit and people think that other people are going to get hurt because of a result of your actions,
Yes.
that's what pisses people off. So this is from Sherwood. Opendoor call volumes were over 1 million. The other day, the stock, which is a market cap of less than $5 billion, I think, traded more shares, more volume than Microsoft. So Matt Levine, as only he can do, wrote this yesterday. New meme stocks dropped. Last week, a reader emailed me. I have a funny AI thing that happened to me this week. My friends and I were talking about Carvana on Tuesday night, which got me curious, and I asked ChatGPT what the equivalent of Carvana today is. ChatGPT told me Opendoor. So as any responsible investors do, we both bought a fair share of Opendoor. The next day, the stock went roaring and went up by over 50%. That's the end of the email. Matt Levine wrote, nice trade for him. Very much not investment advice for you.
Welcome to investing in 2025. I don't know why we should be surprised by this, but this is how a lot of people are looking at the market. Not everybody is going to the Iris Home Conference. Not everybody's coming into this office looking for really professional and sound advice. They are looking for hot things to buy.
They want to make money.
Fan the flames, and there we go. People want this.
So that's a really important reason why it's not manipulation. Eric doesn't control what other people do, number one. And there's a whole conversation that's taken off as a result of him spotting this opportunity that's away from his Twitter feed. It's on Reddit. It's on Twitter. It's in other venues that he has nothing to do with. If people choose to read his opinion and agree with it, or think enough other people will agree with it, that there's an opportunity, at a certain point, we have to hold adults responsible for their own actions.
Nick, how much Opendoor did you buy?
0.
I was going to say, you're
I haven't had an
suspiciously
individual
quiet.
stock
Yeah,
in
right?
years. I haven't, because I'm sitting on it. I'm like,
All right, so back to the market environment and where we are today. Bespoke has a chart showing the 100 most short stocks versus the Russell 1000, a 3-month performance spread. And we're back in 2021 territory. We're back.
Wait, these are the most highly shorted stocks as an
Relative to the
Net-
rest of the
net-
market.
net the
It's a
Russell,
spread, right.
Yeah, net the
So
Russell.
this is 2020 all over again. We're doing it.
2021.
2021.
Yeah.
Yeah.
I mean, it's just the meme stock stuff all over again, right? You just said it. I mean, I don't know what else there is to say on that.
Why are they
It sounds like-
Why are they shorting $2 stocks again? Aren't the memories fairly raw and recent from 3 years ago?
I mean, GameStop, everyone, you start shorting and then, that creates an opportunity for prices to go up very quickly because now these people have to close out their
Yeah.
positions and it's
It's almost the most
bad, yeah.
bullish call you can make these days. If you see the hedge fund shorting stocks right now, the meme stock crowd is all over it. They've been looking for a while for something like this and the right market environment, to Michael's point, where anything goes right now. Melt it up. So they got this. Why Krispy Kreme? We're not eating more donuts. I'm not eating more donuts. But all of a sudden, this stock's up 34%
I saw
in a few
Kohl's.
days.
Kohl's was up 36% in a day.
Yeah.
Kohl's did not come out with AI. That's a short. You only can get that with a short squeeze. I guess the question is has no one learned anything? Why are we shorting $1, $2, $3 stocks? Even if we think they're zeros, it's almost like you're asking for somebody on a message board to whip up a mob to wreck you.
Yeah, the cost benefit's just not there at all. It
Well, how
doesn't
about
make
this?
sense to me.
If there's a lot of shorts, if 20% of the float is short, a stock under $5, just don't do that. You're asking to get blown up. Here's another metric showing that this is by this metric, it's even crazier than 2021. A lot of this is from Daily Chartbook, by the way. Non-profitable tech retail investor participation percent. So I guess that's measuring what percent of these non-profitable names, whatever these dog shit names are,
These are publicly traded companies with
that are
no
losing,
earnings.
that are losing money.
Okay.
25% of the volume is coming from retail investors, which is higher than it was at the peak in 2021. And it's working. So it won't always work, but right now it is.
Yeah, right. So environment, certain environments lend themselves well to this kind of activity. This is making people way more money than the stuff coming out of University of Chicago with small cap beta.
Oh, I can earn.
None of that's
I can
working.
earn an excess of 1.5% a year, maybe over time on average, or I could buy Opendoor and
Or I
ride it
can
from
moon.
1 to 3 in 2 weeks. Not in 2 weeks, in 3 days.
Yeah, and blowing yourself up, especially for people that love to trade these meme stocks, it's not a big deal. Sometimes they publicize it. They were doing it back in 2021. I'm taking a flyer here. People love the drama of the bet. That's what people are doing. They're betting. Why are they doing it now? The environment is ripe for it. It's not like we have all this stimulus money coming our way, but I think people are just tired of waiting around for the next big thing. They probably missed Bitcoin. They're like, I got to get in on this. Probably missed GameStop in the early days. I got to get in on this. People
Does this
want
piss
the
you
action.
off?
I just think there's so, and we're going to talk about this later in the show, but I think this is actually caused by housing prices being too high. And so all this money that would have been, hey, I need to buy a house, I need to do that.
That's
Cosign.
good.
It's just money, and this is not even really my take. I saw this recently. Someone said I have an unsubstantiated take that like there's all this money in all these different asset classes because it's not in housing like it
because
normally
they can't
would
buy
be.
real estate at
Like
the
I
age
can't
that
afford
normally they
because
would.
with rates where they're and those that even have the money to buy real estate, it's like, well, with rates where they are, I don't want to do that. So I have this money sitting either in treasuries or I have it, I'm going to bet it on things, right? So that's how I see this playing out. It's just there's so much money, and what are the opportunities to chase, right? Housing is not one of them, so it's meme stocks and other
it's
stuff.
not even just rates. It's also lack of supply, although in certain markets, supply is coming back online. But like,
Or it's the question
There's
that
no
young
homes.
people are asking themselves, is this the best use of my money, sinking $1 million plus into an asset I might sit in for 40 years? What if I want to move the family to Costa Rica for the year? And I think that's a fundamental change, especially for younger investors. That's going to affect the wealth management business too. If all of a sudden that 30-40% of their capital is freed up to do things,
And
that
they'll buy
changes the
houses
equation.
eventually.
Maybe they will, but right now there's no point in doing it if you can't afford it. And if you have that extra money, take a flyer on a few stocks.
it's so interesting.
Or invest in experience.
So the Fed is indirectly causing this.
Unbelievable.
They're keeping mortgage rates so high
All right, what do you got?
that people are sitting liquid enough to trade meme stocks when they should be making mortgage payments.
What's in the box?
All right. I brought a gift because I always like to bring a gift to this, one of my favorite podcasts. And you know how I roll. You know how I roll.
Super dope.
That's nice.
Wow.
I had this made for,
That's a
Dude.
sweet deck.
this is a sweet deck. Nick's orange and the blue, because that's how we get down.
Yeah,
Love
yeah.
it.
And I'd love for you to.
Let me see the other.
to hang-
Let me see the flip side.
Oh, it's green.
Sweet.
Because
Because
Love it.
were you a skater? Well,
You
were
know
you
what
a
green
skater?
means.
Were you a skater?
No. I looked like one, but I wasn't one.
Were you a skater?
He
I'm
still
a
is.
full
You still
lifetime
are.
skater.
No, I've
Still-
seen you on your board.
Yeah.
I've
but
seen you on a longboard.
That's right.
Did you
Okay.
skate here today?
I skated here yesterday to drop off my stuff. I'm
Okay.
heading for the airport.
Thank
but-
you. We love it.
Yes, and thank you
We
for
love
having
it.
me on the show.
We love it. So, Nick, you're
That's getting hung. That's
Yeah.
getting hung up.
Yeah, that's got to get.
Yeah.
I'll I'll throw trucks and wheels on it and ride all over this
we love
office
it.
if you want.
Nick is
Thank you very
100%
much.
right. On Animal Spirits this week, Ben posed the same question, and I laughed at it. I said, come on. No, it's ridiculous. We got 2 emails. Now, 2 is not a million, but we got 2 emails saying actually, and here's one of them. Wanted to chime in on something from today's episode. Ben asked if people are using their down payments cash to invest in the market, and Michael brushed it off. For what it's worth, that is exactly what I'm doing. And then he laid out why. He's renting, they have money, they can't buy a house. So he's not the only person that's doing this.
Yeah, it's tempting, right? Like, let's say you have 500 grand sitting in an account,
And you're sitting in
and you're
treasury
not
bills?
about to buy a house because nothing's changed.
You're either treasuries or you're
Yeah, so
in
you take,
risk assets.
so you take,
one or the
you
other.
take 20 grand or whatever, or 5 grand.
Yeah. You get a text and someone's like, yo, Eric Jackson, Opendoor. It's like, I was going to buy a house, but it, let's go. Let's YOLO into Opendoor. I guess I could see that phenomenon. I could see people saying, well, the money's just sitting here anyway, and look how good the market is, and look how much action, and my friends are talking about all these things they're trading. Whatever. I'll take 20 grand. I'll throw it into some stuff. See if I can turn it into 50.
I'm a follower and reader of Vanda's research. VandaTrack does great research
Great
on what
stuff,
retail investors like us are actually doing with our money. And they track how we're investing outside of the defined plans, outside of the 401k, the IRAs, et cetera. And we are back at elevated levels, back to close to the 2021
Like
levels.
in the
And-
trenches.
Yeah,
what
and
people
the
are
things
doing.
that we are buying outside of our just normal allocations to our 401ks, which is all the big funds, all the big stocks, are very interesting stocks along AI, but you're going to get an Opendoor in there. You're going to get a Krispy Kreme just because that's where the action is in meme stock land right now. So retail investors are back in it looking for opportunity because they're seeing this big melt up and want to be a part
In the
of it.
last 30 days, I've been buying Solana, Joby Aviation, and Archer.
Oh, they're both mooning.
These are the blue chips of my portfolio now.
To the moon.
The blue
Well,
chips are
literally.
bullshit.
But like to that point, I see my own drift. I wasn't doing that 6 months ago even. Right? And it's just like now I'm entertaining ideas, even flyers, whatever. Like I'm entertaining ideas myself, saying to myself as I'm doing it, this is so dumb.
I almost bought Intel.
Talk about a money loser.
So, all
Put
right,
this options chart up.
calls are almost 70% of the total market volume. Again, hasn't been this high since the 2021 meme days. One more, just more confirmation. The equity euphoria indicator. Last week, the Barclays equity euphoria indicator, which uses options data to quantify investors' giddiness, jumped to its highest level since late December. So I guess if you're listening to this
Yeah, we're
and
there.
you're listening,
We're there.
please be careful. Maybe pump the brakes a little bit. Maybe no more individual positions for a minute. Maybe just let it breathe. Keep doing what you're doing with your 401k, your bi-weekly, whatever you're doing. But if you're going to entertain new positions, just be careful.
Isn't this the hardest thing? When your portfolio value is at a record high and you look at your holdings and in green in your app or on the brokerage
Is
website,
everything?
you see all your stocks like up 80%, up 50%, one after another. It's really hard to talk yourself out of how great you are in that moment. And the problem is it's at that moment where most people are like, what else should I buy? Because you're getting the oxytocin. It's like firing all your serotonin, oxytocin, all those good chemicals are firing all over your brain. And not just from the money you're making, but from you told other people and they made money.
He's told me to just keep buying.
Yeah, Nick. No, but so right
Does
now.
not apply for individual securities.
That's the danger right now. And people that might normally own 20 stocks are buying like 30 stocks because everything they're buying is working. And they're not looking for the next blue chip stock that could go up 10%. Now they're looking for the junk.
I just think it's crazy we're having this conversation. Like 3
So
months ago,
soon.
April
Yeah.
was like the world's ending. Tariffs are gonna, ruin the world economy, and now we're back to meme stock.
unbelievable.
It's like, what?
Yeah, but there's an adrenaline factor to a near-death experience.
That's fair.
And I think 3 months ago, a lot of people looked at their portfolio and were like, "Oh my God, this is so horrible." And it looked like, "Oh, this is really going to be a shitty year because this tariff thing is going to be going on all year." And then that goes away a little bit, reverses, but we just had a near-death experience. Think about it in real life.
It's unbelievable.
People get that shot of adrenaline. They start making out with each other. Like, think about oh my God, we almost died. I think you're my girlfriend now. Like that,
But the
like that.
gaps between near death and euphoria are so compressed right now. We talked about this the last time I was on the show. The bear markets are super cute. They last a couple of weeks, and then we're back off to the races. And then we're back in this concern about a correction, and then we're back off
That's
to the
because
races.
we haven't.
There's no time to catch our
We
breath.
haven't had a real economic reset.
No.
I know the bottom 10%, again, obviously they're hurting always, but especially now. But a real recession that impacts everyone, not just rolling recessions, which we've had, obviously real estate and tech in 2022, but where everyone's eating it. We haven't had it.
Caleb, brag a little bit about Investopedia. So you're the editor-in-chief, and I remember when you joined there, and you were talking about the opportunity.
Yeah.
You have largely
Came right here to this office
Yeah.
or at the Park Avenue office.
That's right. You have largely witnessed that opportunity
Mission
bear out.
accomplished.
Yeah, I mean, you guys are a super important site. I think everyone at some point in any given month that's searching for investment terms land on Investopedia in some way. What are the most search terms that people are landing on this summer, and what do you see going on the platform right now?
I'm so glad you asked.
By the way, monthly active users?
Monthly, we're about 12 million uniques.
Okay.
But I think
What percentage at America versus rest of world?
half.
Wow.
Half US based. These are, I think, a lot of self-directed investors, not by definition, but if you're-
Students, right?
Yeah,
Too?
Yeah, students is where we kind of started. I'm actually bringing Investopedia back to school next year on a university tour because I think we really belong there, helping people learn about money before they got out of school with $36,000 in debt and all
Kids studying for exams,
Absolutely.
securities industry exams.
Yep.
You guys are like a companion
Yeah, we are 26 years old. That's like 260 real years.
in internet time.
in
Yeah.
internet time. And we've evolved because financial markets have evolved, but we're still there for people to be like, what does that mean? But more and more, and as I've been there over the last decade or so, it's been about what is and now what. And that's kind of what we want to be, the voice and the guide for the educated investor. But we know a lot of advisors use us to either get smart or smarten up their clients. So we play in that space as well. But we also realize that the nature of money has changed for a lot of people. Now, some principles will always be there, compounding, dollar cost averaging, all that good stuff that we learn, that we teach, that you teach. That's always been important, but we want to be the ultimate resource for all things money for everybody. We have a great name. We have a great brand. It's an honor to be the editor-in-chief and represent it and be the face of it, even though I have a great face for podcasts, apparently. But we are lucky to still be here. And I think because the brand is so strong, it's really hard to maintain that in an AI world. I was just looking at a story out of Axios citing where ChatGPT and the other AI platforms take content from.
Are they scraping you?
Oh my gosh.
Right.
Heck
So what do
yeah.
you do about
Dude,
that?
on my screen, I have this. I was just going to go there. I hit EBITDA, and Gemini gives me the answer, and you obviously are the first link, but now I have to scroll down to get you.
Yes, and that's a problem.
They're fucking your shit up.
That's a problem. And we're doing whatever we can to protect ourselves from crawlers. We just announced a partnership with a site that protects that. But we also have, through our parent company, Dotdash Meredith, a deal with OpenAI that's been well publicized, where there's a licensing fee and they cite us.
Like Reddit's getting paid, New York Times are getting paid.
Yeah,
money has to change hands, just to be fair.
And our leadership, God bless him, has been behind that 100% since the start, from our chairman and CEO at IAC on down to our CEO at Dotdash Meredith. We have to protect ourselves. At the same time, we can't just sit here and say, oh no, AI is just eating us up like Pac-Man. We got to find other ways to deliver content and experiences to people. We were talking earlier about these live events that I do now at Future Proof. We've been doing a lot more in video, obviously, on various platforms. I just took my podcast to Vodcast Live because I want to find other ways to engage audiences where they are, but we still have to be building the right educational experiences for investors for 2025 and beyond, because we can't just sit here and let it happen.
No,
you
have to evolve too.
Yeah. So back to the question of what have people been looking for? I was just looking for the past 6 months. And obviously we had a lot of people looking up bear markets when we were darn close to a bear market. Call options. What are those? Best inverse ETFs.
Oh, that's great.
Yeah, that's always a good sign.
Not ETFs, inverse ETFs.
Yeah. We had people looking up Bitcoin for the first time if they hadn't looked it up before. What is it? How is it mined? How many will ever be mined? Like, what is this thing that just keeps exploding? If we're going to be the crypto capital of the world, they want to make sure that they understand that as well. Smoot-Hawley, we went back in history to teach them about the Smoot-Hawley. Yeah, the Smoot-Hawley tariffs. Why are they important? And then obviously around Buffett's announcement of his resignation, he's super popular on Investopedia. A lot of people looking at that. But people are, you could see the full spectrum pretty much of America, really, but the world, but what they're worried about. And you can see the people on the bottom who are struggling. What's a hardship withdrawal in my 401k?
Mm.
What's the best personal loan to take right now? Should I tap my Roth IRA? To how do I leverage?
Those queries are hitting Investopedia.
Oh, because we have it all. We have 40,000 pieces of content on the site. So it's everything from how do I protect myself to how do I get promiscuous and take advantage of this upside and take advantage of this meme stock rally or this crypto rally.
Do you guys have a fear greed index?
We have the anxiety index, which tracks traffic to fear-based terms. Fear-based terms like recession, like correction, like
so I'm sure in April it went all the way red.
All the way.
Low now.
Screaming like a 2-year-old toddler in a toy store when it's time to go home. And for good reason. But then it switches just as quickly as our emotions switch with the market. So if you look at price is a great indicator of interest. Volatility is very good for us because people get worried and they're concerned and they want to do something. Learn first, then do something. And that's kind of the way I want Investopedia to evolve. Come to learn, and then we're going to help you do.
Do you ever you have the data on that anxiety index, the spikes? I assume it spikes like
we have
the
that
VIX.
going back to the financial crisis.
Yeah,
You
should give
sent that
to
me years ago.
You should give that to us and let us plot the plot different markets against it. I'd love to see if it's earlier than other fear greed index.
Years ago,
that's what matters.
Years ago, a hedge fund came to us and did that very, very study, and they found that it does precede the VIX.
Was it Scott Bessent?
I'm sure yours is better than Bull Bear, the AAI stuff that is always quoted.
Yeah, that feels
that's
laggy
a survey.
to me.
Yeah,
that's a survey.
But it's older people.
It's older people, and ours is. If you think about it, when you get freaked out, what do? You Google something, or you look it up. You're like, wait, what is that?
And what's it called?
Smoot-Hawley?
What's it called?
The anxiety index, the Investopedia anxiety index. So we have it going back to the financial crisis because that's when, we started waking up to that. I wasn't there at the time, but thankfully we started tracking that data. Being around 26 years, having as many visitors as we do, as many readers, and as much content gives you a ton of data. We have an incredible data team that helps us analyze this stuff.
We want to talk about dumb money?
No, we can skip it.
We're going to skip that?
Yeah.
Okay.
I thought that was my segment.
Where
It was.
Yeah. Where are we going next,
This
Mike?
is yours. Personal responsibility thing.
Oh.
What happened here?
So, all right, here, let me tell you a story. This is a true story. This just happened. And a lot of advisors are talking about this. And love to hear what you guys think. A client tells her advisor, doesn't matter what firm it is, it's a big, big RIA. Client tells her advisor, I want to liquidate my IRA. The advisor claims that they try to talk her out of it because there are taxes and penalties. And the client says, just tell me what the taxes and penalties are.
Wait, in the IRA?
Yeah. Like to liquidate it early.
Oh, like get their money out.
Like, give me my money. Liquidate it.
Okay.
So, like, at the end of the day, the advisor is not the boss. The client is the boss. So you can warn a client, this is not a great idea. The client doesn't tell the advisor what they're doing with the money either, which I think is a really key part of the story. The client takes that money, $82,000, out of her IRA, also somehow has another $800,000, and this person is listed in the article as a cashier at a retail store. So I'm not 1,000% sure how where that money came from. Anyway, the client gets sucked in by somebody in her DMs who's running a crypto scam. It's someone actually impersonating someone else who she trusted, and it's a crypto scam, and she puts all her money in it, and $882,000 goes to zero.
Ugh.
Okay, horrible. We all agree. Nobody would say something as callous as serves you right or tough shit. Like, you have to have compassion for people because this person's not getting that money back. But here's the thing. Now this person is suing the RIA. And by the way, only $82,000 of her loss came from the RIA. The other $800,000 came from somewhere else. But this person needs money. So her answer is, well, I'm going to sue the RIA because they should have talked me out of this.
All right, that's over the line.
I think it's like outrageous, but I don't think the judge is going to throw it out. I feel like this suit, either they'll settle it just to get it over with.
But on what merit? What is she claiming?
She's claiming that the advisor did not. Here, I'll tell you exactly, and then you guys tell me
They
what you
broke
think.
the fiduciary rule.
Yeah.
Come on.
According to the lawsuit filed in New York federal court, the woman believed the firm, quote, would have her best interest at heart when operating as her financial advisor. Instead, the firm recommended a liquidation of her account to meet her objectives when it knew or should have known its recommendation was unsuitable because of the purported investment with the fraudster. The advisor doesn't know about the fraudster. The client is not saying, yeah, I want to put it all into this crypto thing that somebody DM'd me. So, like, at a certain point, I understand the frustration. You lost all your money. But what do you want the advisor to do? Like, hit you over the head with a pan?
Well, what we would have done, we would have just delinked. We would have said, you're not our client. Like, this is obviously...
That is the right answer, is to say, you're not taking our advice. Yeah. We're not taking money
I think
from
it
you.
depends on how big, okay, $80,000, how much other money do they have with you? If that's like all her money, you don't know the full situation. I read the article and the advisor's basically saying we were strongly against this. We told this to the client. Like, as long as you have that recorded somewhere and
Which I'm
it's
sure
like
they do.
timestamped, then like I feel like you're gonna go scot-free. At the end of the day, the client made that decision. Should you have pried the client more? Possibly. Should you have advisors that are more like better at doing that coaching? Of course. But at the end of the day, like if someone's like, no, I want this money, I want to pay the fees. What are you? They are the boss. You're right, Josh. They're the boss.
Here's the complaint. Quote, this is the plaintiff, what they're saying. Despite the rising prevalence of pig butchering and cryptocurrency scams, no representative ever inquired further as to why blank's investment required an early liquidation of her retirement account. The complaint read,
I find that hard to believe.
Instead, the firm asked no further clarification or explanation of plaintiff's investment purpose and only asked how much she wanted withheld for federal and state tax deductions and mentioned the penalty fee for early withdrawal. So she took out most of her money in June. Didn't take long to lose it all. I don't know. I think the advisor has to say a couple of things like, don't do this, or I really don't think you should do this because. But if the client's not telling the advisor what they're doing with the money, how strenuously can you say no to someone whose money it is?
I think it's just going to come down to how good is the documentation. Because like maybe, let's say the advisor's super busy and like this client says, I need to take this money out, and this person's not really pushing back to like, sure, take it, whatever. Like, what do you need? Okay, they just want to get it done. They're not really thinking through. If there's no recommendation to not do anything with it, then she might have a case.
Oh, you're right,
But
because the advisor might be like, "Oh, it's an $80,000. I don't have time for that. Just fine."
yeah,
Do
like
whatever- do
imagine
whatever
this
you want."
client
Yeah.
has another million
Right,
with them. I
right.
know 80 grand in the grand scheme of the relationship is not that large. It's 8%, right? Basically. So you're like, okay, yeah, whatever, no big deal. Just sign it off. And now they're saying, hey, I should have that money back. And
The
so-
bigger issue is this type of stuff is exploding, these scams. And it seems so obvious to us. Like, how does this keep happening?
This is on By the way, this is a DM on TikTok, which is incredible.
So
to me.
how do we as an industry and as a society do a better job of protecting these people? How loud do we have to scream, do not give money in DMs? People aren't like this. How do we do it?
You could do whatever you want. They're not going to listen.
They're not going to listen. But you could also have rules in your portfolio that would not allow this. And if, I mean, I'm sure her advisor was like, what are you doing? If they knew, I'm not sure.
Anyway,
but
with
you think that they would stop them from doing it.
the impersonation and the specificity and the
it's good.
precision is going to get so bad that the scams are going to explode.
Yeah, they're worried. Sam Altman had a big conclave with leaders from financial services this week. Of course, he's pitching, OpenAI services. But like cybersecurity in the age of AI, you know how you log into your brokerage account? It's a Face ID on the app on your phone. That could obviously be faked. Voice print is another way. Like when I call into Fidelity, I don't have to tell them anything about myself because they identify me based on me answering a question. All of that can be faked very easily.
Mhm.
And I think Sam Altman's message to the people from the banks and brokerages whom he met with was like it or not, we opened Pandora's box. It's open. Like this is what it's
We
going to
need
be.
Theranos to take the blood from our fingerprint to validate. Speaking of scams.
I think what you said is right. If there are contemporaneous notes in Salesforce, I don't know what CRM this advisory firm uses.
Yeah.
If there are contemporaneous notes, or God forbid, an AI note taker from a Zoom call, which would be amazing,
Mhm.
where the rep is telling this woman, "Do not do this." That's open. That's like,
Case closed.
just give it to the judge. Why are we even
Yeah.
talking about this?
But
Right?
you also think because you really need those details. Without that, it's really hard to know. Because you're right. If it's like, oh, it's a small piece of their portfolio, like, okay, let me just get this done. I'm busy. They don't.
Yeah,
want to
yeah,
think
yeah.
it
Who
through. They
cares?
didn't
Fine,
take
take
these
your money.
notes. Like, okay, I don't
Could
recommend
be.
that. But
She had an
whatever.
extra $800,000 apparently.
I mean, yeah. So maybe she had a lot more money. You don't know.
All right,
So-
guys, switching gears. There's $7 trillion in money market funds,
Hence the hence the crime wave.
and hence open.
Yep.
What?
Look at this.
How does this line go down? What would have to happen for this line to go down?
Houses get more
Is-
affordable.
Rates go down.
Is it just interest rates come down and people buy houses? Maybe
Yes.
that's probably the most obvious
Yes,
one.
literally.
I mean, either
that's
housing
what should happen.
One of three things: either house prices come down, interest rates come down, or both. That's
That's
the
the
only
same
way it's
thing,
going to allow these dollars to go somewhere. I'm telling you, I'm in this line here. I have some treasuries
And
and
this
I'm waiting
won't-
to buy. But
This won't
when,
go
I
from
don't know.
7 trillion to 2 trillion.
Yeah, yeah.
But it'll go from 7 to 6.
Yeah.
The trajectory will only change if and when there's something else to do.
Mhm.
What do you think about that?
I totally agree. And I think a lot of people who fear the stories that we've just been talking about are just like, I'm fine here at 4.5%. I'm just fine here. Or maybe this is the older crowd that is retired that wants to de-risk a little bit, take some off the table or keep it in savings. I think it's a lot of that. I don't necessarily think this is a shift where all of a sudden this thing flips on its head. Maybe it goes down to 5 trillion or 6 trillion, but it will be because of the big asset purchases, but it's not going necessarily into the S&P 500.
Last year, when the Fed started cutting rates, we thought it would be a new rate cutting cycle. It was just a couple of rate cuts. Michael said, I really don't think people are pulling money out of money market funds. Unless we get to 2% and people really get antsy, they'll probably stay put. And that's exactly, not only did they stay put, you could see the number go up. The money just kept pouring in. I guess I'm curious what you guys think. At what Fed funds rate does this materially change? Is it what's the magic number in the mind of the investor?
I think it's low.
I think it's lower
You think
than
it's
3.
under
I was gonna say 3.
it's not 4%.
No, I think it's under 3.
Under 3.
Yeah.
Because 4% is pretty comfortable for a lot of people that just don't like taking risks. And if people are still scared, and they should be, of scams in the market or big crashes like we had, for a minute during COVID.
4
or
is still
2000,
high.
4's high.
relative to recent history.
Yeah,
I'm
and then
very happy getting
what's
4.
the equity risk premium for big institutional managers? It's like they got to protect capital. They are paid to protect capital for rich people and then find alpha whenever they can. Right now, it's not so hard to find it, but I think plenty of people are very happy with the bulk of their savings, especially older people, earning 4.5%.
What do you think?
Yeah, even after inflation, you're basically flat for the year, and so people are like, yeah, I can deal with that. So
Like if inflation is 2 points, what is it
it
now?
was just 2.9 over the last years,
2.9.
but with 4, so like in theory there was a real return.
But people
Obviously,
don't, people don't. You think in real returns? People
yeah,
don't.
I know they don't,
Yeah.
but it's still. You can make the argument right now that if you buy treasuries, you're basically getting like no return. I mean, yes, technically, according to last year, we got a real return. Maybe inflation's higher than we think, and so maybe it's only it's just flat for the year.
Plus,
It's not-
and I know you guys probably talked about this, and I'm sure you saw it. More 401k millionaires than ever were printed last year, and you talk about this as well. I've heard you talk about it. You write about it in your books. $1 million sounds like a lot. Was always the number that a lot of people wanted to get to. $1 million isn't $1 million anymore, but for a lot of people that got there, they're like, "Oh, I got there. I want to stay here, and this is a way to stay."
I
there.
saw something from American Express's earnings call that I wanted to talk about it. And I know American Express serves an affluent consumer, obviously, but this stood out to me. They're talking about the year-over-year growth, and they break it down by Gen Z, millennials, Gen X, and baby boomers. The year-over-year growth for Gen Z was 39%, which is wild.
What is it? But what is
39% in terms of services billed business, so spending. Equally remarkable is millennials, people my age, make up 30% of all spending on Amex on the consumer side, which is more than baby boomers are spending. So millennials are doing all right, and Gen Z is doing all right.
This is the experience economy. People are spending it on experience, not on the homes. They want to have that ultimate Instagram photo at that special place with that special chef and that special drink. And
So Nick, you're younger than us. I want to give this to you in a sec, but the next chart shows millennials and Gen Z. It compares the delinquency of American Express customers versus non. And it's 4.4% for millennials and Gen Z. These are 30 days past due, okay? And for Amex customers in this age cohort, it's only 1.9%. And there's a similar spread on Gen X and baby boomer side. So again, Amex, I know is not representative of the entire economy, but for these people, they're doing all right. And Nick, you are these people. You spend time with these people. What do you see in terms of experience, services, spending?
I mean, I think a lot of this, once again, I keep repeating the same point, but it comes back to housing and like the whole idea of the American dream is you're supposed to buy a house and do all this stuff. I think the American dream has changed in a lot of ways and people are traveling a lot more. TSA throughput is hitting records, right? And so if you think about like I think about my parents when they were young, they did not get on airplanes often. I'm guessing your parents didn't either, right? But now it's like very common for people. Like my sister went to Japan and she does not have a very high paying job. It's like people say, you know what? I'd rather not own, I'll rent and I'll travel the world and see stuff. And so you're right. Everything Caleb said, Instagram generation, that is more important to have that photo versus just like, oh, I own a house, right?
I actually think it's smart though.
So do I. I love that.
Now, here's where it's not that smart is they are if you live in a top 20 city, you're throwing away a lot of money in rent.
Mm-hmm.
Some would dispute that
It's not throwing it
characterization.
away.
You're not throwing it away. You're consuming it. Okay, we agree. But you are not building equity in an asset. That's fine. You don't have to. Or maybe you work for a company that's comping you with stock options and you are building an asset. It's just not in a physical. That's perfectly fine too. I know that's more common than ever.
Mm-hmm.
So that's where it's, to me, not that great. But where it's really great, these are the times of your lives. Like the times of our lives, I should say. Like, what's more important than how you spent your life? Like I spent my life going out and doing and seeing the things that I wanted to see, not anchored to a fucking pile of bricks in a suburb somewhere. I kind of find that to be really admirable about the way millennials and Gen Z are carrying on. I'm sure a lot of them wish it were the opposite and they didn't have to go out and look for so many because when I watch Instagram video of people standing in 2-hour lines in Montauk, it just looks dumb as shit to me. But I was also that age and I'm sure I was doing things equally that dumb. I just wasn't doing stuff like that.
Mm-hmm.
We were cut the line kids. We knew the promoters. I come from a different world. But like I sort of get it in the absence of the ability to buy a house. Well, yeah, we should be in Montauk waiting online to get into a bar.
I also think there's a little of this going on. I have 19 and a 21-year-old, two daughters, and I talk to them and their friends about investing in this whole thing. They know what I do, but a lot of them just reject the premise. Not like why, they understand what investing is and why you can build and how you can build wealth with it. But I get a lot of the time from them the question that I can't answer, and I think I've asked you this before: why does this keep working?
What's this?
This stock market, why do investments continue to grow? Why should I, I know it's worked forever and it's worked for the last 100 years or so, but they
What do you
reject the
tell
whole
them?
premise of the fact that this market is just going to keep going up. Companies are going to keep generating profits. The stock market is a place to generate returns. So if they don't believe in that, less and less younger people may not believe in that. They see the get-rich-quick schemes, whether it's crypto or meme stocks or whatever, and they're maybe not as invested in the investment process as we were taught to be, in the financial services media and the market has taught us to be. Maybe they just reject it and they're like, I'm going to spend it
So
on.
their role models, though, are super involved in business. This Gen Z's role models are all creators and influencers and people that have built companies, and they look up to people like Kai Cenat and Mr. Beast, and they look up to like Alex Cooper and Alex Earl, and these are people that created their own lane for themselves. They built their own platform, their own content. They hire their friends to hold the cameras. Like iShowSpeed is a kid surrounded by his old friends that he grew up with, traveling the world doing stunts. But it's a business. So I do think that Gen Z is enamored with business. But to your point, I think they look at the stock market like another casino. Oh, there's no sport on I want to bet on? All right, maybe I'll do some crypto, maybe I'll do some stocks. That part I agree with you. But I don't think they dislike the premise of capitalism and business and making money.
They don't like corporate capitalism.
I think they question
That
the
could be-
premise.
that could be the
I think
difference.
there's a lot of that as well. And they're also, a lot of them going into a job market where they're fearing and they're hearing that AI is going to take every job anyway. So what's the point of it all?
Why even buy into this if it's all,
All
going
right,
to
so
come crashing
this
down?
is a really nice segue to my answer to why does the stock market go up and why will it continue to go up, hopefully forever and ever.
Positioning.
And obviously, with bear markets in between and lost decades and all that sort of stuff, is greed in a good way. We are all greedy. It is never enough for each of us, and it is certainly never enough for any of us. And at the corporate level, people are motivated to get up, improve their financial situation, and all of that shows up in earnings per share. And that is what drives the stock market ultimately. It's really that simple. So in 2018, I tweeted this pie chart. And I said, the market cap of the top 5 S&P 500 companies were equal to the market cap of the bottom 282 companies. And 7 years ago, this seemed out.
People lost their shit when they saw this, by the way.
I remember
that. I was
It was
on Twitter
crazy.
then.
People seemed outraged that how could this even be?
Look at this.
It does not compute. How? Please make it make sense. Well, here we are
It's way
7
worse.
years later, and
It's
they're
worse.
equal to the bottom 411 companies.
The
Four-
top five.
The top
have
five.
the same market
Or is
cap
it-
as
no,
the
the
No,
top
no, no,
seven,
no. Hold
the
on.
top seven.
No. The top
Top
5.
seven.
No.
Oh, the top five.
No. The top. I know what we're looking at. Just look at me for a sec. The top 5 are now equal to the bottom 411.
Look
Oh,
at me.
411.
I'm the
Okay.
captain now.
The Mag 7. The Mag 7
very
is
equal to that.
equal to the bottom 432 companies.
It's been
It's just
bananas.
unbelievable.
That's a great argument for index funds if I've
Yeah.
ever seen one.
Yeah.
All right, last thing to kick the hornet's nest a little bit before we move on to Nick's books. Last week, JC was in that chair talking about how $2 trillion is around the air, $4 trillion for crypto is around the air. And I'm like, dude, come on. It's NVIDIA. It's not nothing. It is a lot of money. You're sounding ridiculous. And I was thinking about this yesterday, and I was telling Josh, hey, wait a minute. It's not actually $4 trillion. And the reason why it's not actually $4 trillion is because it's not a market cap. We have transposed this idea of, okay, coins outstanding times price is market cap, the same way we do with the stock market. It's not the same thing because hypothetically, if everybody went to sell NVIDIA, just everybody went to sell, and I know there's buyers for every sales, but if everybody went to do that, at some point, either NVIDIA would buy up all of its stock back, or more likely, private companies, a private consortium of investors would come in, whether it's at 2 trillion or 3 trillion or 1 trillion, and say, whoa, we'll buy the whole thing. We'll take all of it. And give me the $90 billion in revenue. We'll just take it all. There is a floor for these businesses because there's cash flows and fundamentals. Similarly, there is a theoretical ceiling because at some point the numbers don't make sense. With Bitcoin and crypto, these are not real numbers because Bitcoin can theoretically go to $1. If everybody truly went to sell and Michael Saylor was the only buyer, nobody would want it. He's not going to want all the Bitcoin if nobody else wants a Bitcoin. So the $4 trillion is
leverage would take him to zero.
It's, it's artificial.
Zero.
There's no floor. It's artificial. Similarly, the cap or the ceiling for which we're thinking about these numbers, as crazy as this sounds, it might be a lot higher than we think. Because not only does everybody not want to sell, but it's a race to buy Bitcoin, and there is a fixed supply. And so it might get if you're listening to me and you want to strangle me, and this is pissing you off, it might get a lot stupider.
What part do you think would piss people off that there's no ceiling?
The part that I'm saying that $2 trillion
Bitcoin could be $25 trillion.
Yeah, because it's not
saying it can't.
Because it's not actually $25 trillion.
Well, that is the bull case from an investing standpoint, is that there's no ceiling, but there is a limit to the amount of Bitcoin. That's literally what the bull case is.
Correct.
I mean, this is true of any stock. This is true of any individual stock.
No, it's not.
I'm saying, like, if everyone goes to sell, pick a stock. If everyone goes to sell that stock, it's going to go down. And just to play devil's advocate, I more agree with you than disagree.
But he's saying the fundamentals would create a floor.
But I'm telling you, if everyone's selling Nvidia, I mean everyone, and it's going to $1 trillion. The fundamentals don't exist.
But you're being literal. But
But they do exist. The company continues to sell chips.
Yeah, but
and earn money.
In what situation is Nvidia down 75%, and that is like not a fundamental? Like the chips, aren't
it
worth
went down
anything.
70% in 2022 when the crypto market crashed, and I know that because I owned it. But the fundamentals of the business, they might have been up and down, but they were still earning revenue and profits.
Yeah, I hear what you're saying. But
trust me,
70%.
Trust me, I support asset ownership versus like an income producing asset, like a business over crypto.
Yeah.
I get that. I'm just saying, in what world does that happen where this is like, Nvidia's off 80, 90% or something?
Pick any business. My point is the cash flows support a floor. Wherever the floor is.
No, I agree.
There's no floor to
agree with
Bitcoin.
that.
The insight is what I gave you yesterday. It is. I said, invert! You must always invert. No, what I said was we are borrowing this term market cap from the stock market world because it's all we know. It's like a skeuomorph. Like Apple made the icons on its desktop, the filing cabinet, the clock, because we're comfortable with that iconography and we understand filing cabinet, okay, I put files in there. That's why we use market cap. What it actually is a supply, like a dollar. We don't talk about the market cap of the US dollar. We talk about the dollar supply. With Bitcoin, we should really be saying supply. We should not be saying market cap or shares outstanding because it's not a corporation. But too late. That ship has sailed, and I think we're stuck on this market cap mentality for the end of time.
What do you think?
I think things are going to change really fast here. I was at Bitcoin 2025 in Vegas about a month or so ago, and I've been to a few of these. This was very different. There were entire aisles now of Bitcoin lenders that'll give you fiat currency, legal tender for your Bitcoin. There are plenty of millionaires out there that don't own a single share of stock in the S&P 500, don't own a single treasury, have very little money in a savings account, but they have $10 million in Bitcoin because they started buying because they heard somebody on some chat group, who knows where.
But now
back
they're in
in
the
2014.
system. That's what your point is.
They're
right?
in the system and they're borrowing against it.
Right.
You can now buy a home with Bitcoin. You could buy, put down money for a mortgage. And as soon as you're using it for leverage to access legal tender,
inflation,
fiat currency.
More inflation coming.
Right. More inflation coming our way. But if it goes to zero, what happens then?
There are real assets now tethered to the value of Bitcoin.
Right. So when JC, and I heard him say it on your show, if it goes to zero, nobody's going to care. There's about 50 million people that are going to care because they own Bitcoin in some way, shape, or form. Now, there's probably about 1 million that own most of it. We all know that.
His point was systemically
in the capital markets.
Bitcoin can't bring down Citigroup.
Yeah.
He's right about that. Yeah. Not until Citigroup gets into we'll take your Bitcoin and give you a mortgage.
So let me ask you a question then. That's a really great point. I'm glad you made it. This week, just an acceleration in TradFi, I hate that word, in regular financial institutions doing deals in the crypto world. We saw PNC Bank do a tie-up with Coinbase. PNC Bank has customers that are multimillionaires that want a solution to crypto in some way tied in with their regular bank account. This makes so much sense. Of course, we're going to see more of that. Coinbase is rapidly emerging as like the legitimate way for traditional financial institutions to link the traditional financial assets of their customers with their crypto holdings. If you had to bet, you would definitely say over the next 6 months, there'll be way more of that.
It's just starting.
It's just starting.
Every
it's like
single earnings call
innings.
had questions about tokenization and stable coins on the financial side. Every single one that I listened to.
Yeah, and you had Rick Edelman on here, and he was just talking about everything is going to be tokenized. So there's going to be a proxy for everything else out there, but a lot of it is going to be based in this crypto world. So I understand it would not affect the capital markets necessarily. Not yet, but it's creeping deeper and deeper into our capital
Your
markets.
argument is even at the current $4 trillion for the crypto asset level, it's plenty systemic.
Yeah, it's BlackRock has $78 billion of Bitcoin. I just saw.
Zero would hurt. Zero would hurt.
Yeah,
for sure.
I think it would hurt, and it would be also people who have grown up with this as the next way to make money or the best performing asset they've ever seen in their lifetime, and the best performing asset in air quotes that we've ever seen. This would be not only that, it'd be like a confidence ripper. It'd be like ripping the rug out from under a lot of people who believe that this is the future.
Imagine the lawsuits.
We asked people in our recent survey, what asset class do you think will perform best over the next 4 years under this administration? Stocks number one, U.S. stocks number two, crypto.
Yeah, I'm not surprised by that. I actually, if you told me the order were flipped, I'd believe that.
It's pretty close, I'll tell you that.
Yeah. Can we talk about Just Keep Buying, the original Nick Maggiulli book? Okay.
Let's do it.
It aged exceptionally well. So you put the book out in 2022, sold 400,000 copies.
That's insane.
You definitely did not buy most of those. The book is a huge hit, dude. 80% of that is non-US. So let's start there. Why do you think this book translated so well to investors around the world in a way that most finance books in America really don't? What do you think it was?
I think it was just the data I put in there. Because if I'm being honest, like Just Keep Buying is not like the name is, I guess, original, but like the idea of, you just, dollar cost average over time, that is an old idea.
But to a new generation of investors, it's brand new.
But I also put I think the new piece was the data, and like I basically proved it. I was like, look, this is the subtitle is proven strategies, right? So I wanted to prove this like undeniably, and so that was the point of the book, and that's why I did it. And that translates all the data and all there that you're not going to really find that in many other books that is talking about these types of things. And so because I had all of that, it translates. But there's a chart I put in here I think is very useful. So, the biggest countries I've sold in are Japan and Taiwan. I have over 100,000 sales in each of those countries. And I think one of the reasons—
By the way, dude, you sold 100,000 books in Japanese
and in
100,000 in Chinese.
In Taiwan, yeah.
I mean—
It's great. The Taiwan, like I knew about Japan.
Kids selling investing books in a communist country. It's unbelievable.
Wait, what about Thailand? Do you get paid in dong?
No, I don't actually think I have there's no Thai version yet. It's in production, but it's being delayed. Long story. But I'm saying, look, this chart I think is very useful because there's a lot of Asian investors buying U.S. assets. 42% of their assets are actually in U.S. assets,
That's
of their abroad
crazy.
assets, foreign assets. So, and that's U.S. stocks and bonds. And so these this is from a Bloomberg article, and these flows are happening. And so like when I'm thinking about like, well, how is this impacting me personally as like an author? It's like, that's how it's doing it.
What
But
if
everyone's
you
like, they
caused—
want to keep buying
What
U.S.
if you
stock
caused
market.
this?
I didn't cause it.
The Maggiulli effect.
Ironically,
what if you did?
I joke that like, I was born in November 1989, the Nikkei peaked the next month. And then like my book came out in Japan in June 23 and it peaked 7 months later, like in early 2024, right? It reached those highs from 30 years ago, right? So like at a 30-year drawdown, it finally, 34-year drawdown, it came back. And so, no, I'm obviously not causal at all. I mean, in some very, very marginal way, but no, this has been happening for a long time. The Chinese are buying a lot of homes here in the United States, the apartments in New York City. You can think about all these things where there's a lot of money in Asia that's coming in here, and I think that's a big piece of it. There are a lot of Asian retail investors.
There's a couple of things I love. One of the things is that the repudiation of your message, Just Keep Buying, has always been, now do Japan. And you can say, all right, I'll do Japan, motherfucker. New record high for the Nikkei this week. What else you want me to do?
Yeah, and I
put
it in there.
What do you got? What else you got? We have stock markets around the world now breaking out.
But you did
to new
Japan.
highs.
The dumbest thing is like people went all in 1989 and they never bought another single share. Yes,
Yeah.
Japan sucked. It happened. But what if you dollar cost average in
Yeah,
Japan?
and that's what I did. I have a chart in the book where I say if you put $1 a day into the Nikkei, right? And of course, with currency fluctuate, there's a lot of other things there, but let's just say $1 a day in there, you would have kept pace with inflation, which is not great, but that is typically what you see in the worst from 62 to 72, I think, or 62 to I think 82 in the US, which is one of the worst 20-year periods. It was something similar. If you just kept buying dollar cost averaging over that period, you would have basically kept pace with inflation, which is one of the worst periods in U.S. history.
What's so funny is one of your most known blog posts was where you answered the question with data, the way that you do.
Mm-hmm.
What's smarter, lump sum investment at one point in time or dollar cost average? Don't put it all in now, but put it on over time. Definitively the right answer, because markets trend higher over time, is the lump sum wins out over most time periods, and you proved it. But the message of just keep buying is a DCA message. And the reason it's necessary is because most of the people reading it don't have all the money they're ever going to make. They're going to make more money next year.
Yeah.
So it has to be a DCA message.
Yeah, and also, those are two different, I think there's a definitional issue here. So there's two different definitions for DCA, which we both use all the time. And so we're talking about everyone just calls, we call Bitcoin market cap. The same thing is the issue with DCA. So when you're doing dollar cost averaging, the original definition, it means you're just buying over time, but you're buying when you get paid. So if you think your 401k, you don't say, oh yeah, I'm lump summing every 2 weeks in my
automated.
401k.
Yeah.
But that's what you're doing. People call that dollar cost averaging, but you're actually making lump sum investment because you're buying as soon as you have the money. That's the important piece. When are you buying? If you're buying as soon as you have the money to invest, that's lump summing.
The 401k contribution
is a lump sum.
Looks like a DCA because it's periodic over time, but it's a lump sum because you're not getting the withholding.
Yeah, you
and
don't
piecing it into the market. You're just throwing it in.
You don't say take 15 grand out of my first. No one has a 15 grand first paycheck, but you don't just say, hey, I'm going to donate, or contribute 15 grand, take that out of my paycheck, and I'm slowly going to put it in. No, you just take it out throughout the year, right? That's technically a lump sum investment, right?
Which speaks to what we were talking about earlier. Why does the market keep going up? You taught me
that's a really good answer.
It's the relentless bid. Every 2 weeks, we do the same thing. We don't change our allocation.
Yeah.
That's you?
Yeah.
Credit to
The
you.
relentless bid is great.
But you're right about that. We don't change our behavior at all. First of all, your books are terrific. Just Keep Buying is an amazing title.
I appreciate that.
For one, this book is incredible too. I've recommended it to people already. And you're great at taking the data and storytelling with it in a way that makes sense to educated investors. So
let me see that. Let me see this.
Well, this
is
is
terrific.
one, the Wealth Ladder.
All right, so camera 2, I'm showing you Nick's new book. This is called The Wealth Ladder, Proven Strategies for Every Step of Your Financial Life. Now, you did something in here that's getting traction on social media. You broke people up. It's not a caste system. I saw somebody say that.
I didn't see that yet. I'll have to look
You'll
later.
love it. You'll love it. It's not a caste system.
It's rungs.
You're not ranking people based on where they belong in society. What you're saying, the rungs of the wealth ladder, right?
Mm-hmm.
So you're saying the lowest rung, but you're not using that term. You're
I
saying
use levels. I use levels
level
because
1.
a lot of this is marketing. If I'd call my first book Dollar Cost Averaging, no one would have bought it. Just Keep Buying is a better thing. I call these levels.
What's levels 1 through 6, and where would you put me?
Yeah, so this is household net worth. So it's households, and then net worth is all your assets.
So this is not
minus all
income.
your
This is
liabilities.
not current income. This is
not
literally
income.
assets minus whatever debts you have.
We'll get to this chart in a second, but for the levels, just straight up, level 1, less than $10,000. And this is for the US, less than $10,000 in net worth. Level 2 is $10,000 to $100,000. Level 3 is $100,000 to $1 million. Level 4 is $1 million to $10 million.
But you're calling these things something.
Yeah,
You're saying,
these are all level. Oh no, in the tweet online, I said let me get to that. These are all different economic classes, which I'll get to at the end. Level 5.
Wait, hang on. I know you have to draw the line somewhere.
Yeah.
These seem a bit wide, the bands.
They are wide.
Yeah.
They
$1
are
million
quite
to
wide.
$10 million.
They're wide.
Somebody with a net
but
worth of $1 million does not have the same lifestyle as somebody with a net worth of $10 million.
Yeah, I agree. Those are, but the one at $1 million is closer to level 3, and the one at $10 million is closer to level 5. I'm saying the people 4 and 6 are basically identical.
I know you have to draw
I'm
the
saying
line somewhere.
4 million, 6 million are basically identical. You're saying that's $2 million, but that person is not going to spend that $2 million. They're going to have a little bit more income. They're going to maybe have a vacation home.
Fair.
They're not flying private. Your lifestyle changes with massive, a 10x logarithmic jump. That's where you're starting to see.
That was your big insight.
That's my big insight, and the whole reason I came up with this levels framework, because a lot of people have done levels of wealth. A lot of different people have done it. the problem is there's no easy way to memorize this. And so by using the logarithms, it would just made it so much easier doing 10x. So, hey, if I know that level 3, 100,000 to a million, if I know that's like the middle class, which it is in the United States, 43% of households are in
What's the
level
middle
3.
class? Level 3?
Level 3,
Which is
100,000 to a million.
100 to a million
Yeah.
is 40% of the country?
40% of the country. 40%
Okay, so-
of U.S. households. Yeah.
Okay, but then you talk about the difficulty in getting from one level to the next.
Yep.
And of course, most people don't ascend into level 5.
Yeah, that's less than 2% of households ever
Right.
make it to level 5. And level
Okay.
6, which is 100 million plus, that's like, less than 0.0001%.
Now, do you
It's
have to fight a main bad guy at the end of each level?
like, no, unfortunately.
You sort of do,
no.
though. Like,
I guess there's like the thing to look out for. Like
Yeah.
in level 5, it's over concentration. It's
Who's
not
the
too
final
much-
boss?
oh, I was
That-
gonna say,
yeah.
I was gonna say, the end of level 5 is a mistress.
Oh,
like-
there's that too. I mean, there's
Yeah.
like the personal
The
attack.
temptations that come along.
Of course, that's
Okay.
everywhere.
And level
throughout
3,
this.
it's the IRS. Level
Yeah.
4 is Powell.
All right. So, congratulations. The book came out this week.
Yeah, came out on Tuesday.
All right. So, you're doing a ton of shit.
Yeah,
You're
a
gonna
lot
be
of
on
stuff dropping.
Can we get you on Caleb's podcast?
Yeah.
We're
It's
gonna
on.
chat-
Booked?
we're gonna chat. He gives me the best intros, so I love your podcast.
I know you're going on Jill Schlesinger, and
Yep.
she texted us to find out the most embarrassing thing about you that nobody knows.
I should just send her that photo of me in high school. Maybe that's pretty good. But I
She
actually
might
like
have-
the photo.
I have to be honest. She might have that. She might be in possession of that photo. You were a metalhead.
Yeah, I know
Okay.
Ozzy. I mean, crazy. Like I'm supposed to be celebrating my book and everything. Ozzy dies this week, and so for me, that's like a big.
I know
so
that's a big
rest in
deal.
peace
If you're
to Ozzy,
a metalhead, Ozzy is your Jerry Garcia would be,
He's-
or
yeah.
Kurt Cobain, or
he's your Ozzy basically. So
he's your
Like
Ozzy.
he was there before all. I mean, I guess I don't know what Jerry Garcia was, but in the timeline. But
You know what's interesting? Ozzy's biggest songs all predate you basically being born.
Yeah, for sure. I mean, yeah, he was, early 80s with Sabbath. Sabbath was the metal band. They started metal in the 70s. Like
70s.
they started that entire genre, right?
The
So,
Beatles
yeah.
actually started heavy metal.
What song?
Helter Skelter.
It's
Caleb, tell him.
debatable. I say it's more rock.
It's not really
The
debatable.
It's like a hard rock
The Beatles
song.
were a rock band from Liverpool.
Oh, no, I know the Beatles are. Thank you.
Helter Skelter's the first heavy metal song.
Some have said
That's
it's
in the 60s.
Steppenwolf, Born to Be Wild. They say that's the first metal song. This has been debated. Trust me, I've thought about this a lot. This has been highly debated.
Have you
Okay.
quantified it?
I have not quantified it, but I think it's Born to Be Wild by Steppen. He says heavy metal thunder. When he's
What was
that's
it
where-
that attracted you to metal when you were a teenager? It was just the people you were around were into that,
it
or
was
was
high
it something
energy.
else?
It was high
Chaos.
energy. Yeah, there's a lot of high energy to it. I just like the sound of it. I mean, I started growing my hair and I liked it. It was fun.
For a metalhead, you quote a lot of great rappers in this book.
I know.
You got
Well, I
Fat
love that
Joe,
too.
you got
They're
Jay-Z.
also high energy, right? I got
Did
Pusha
you
T,
watch?
yeah.
Did you watch the Billy Joel doc yet?
No.
Yeah.
Worth it?
Not yet. I'm going to watch it this weekend.
It's a requirement for
you're
Long
from New
Island
York.
people, right?
Come on.
Can I? Well, what were your? I'm guessing your music was like. You were a skater. You're like one
Skater,
generation older than me.
snowboarder,
Okay, Clash.
Pearl Jam.
Mhm.
You're the
reggae.
are you the
What?
reggae?
Yeah, I'm a
ska?
reggae head.
Like
Reggae, pure reggae, dancehall reggae, roots
dancehall.
reggae. I had a reggae show in college.
wow.
If I wasn't doing this, I would probably be a reggae entertainer at Sunsplash.
All right.
Oh wait, can we do the?
Another white guy with dreads. That'd be amazing.
that's what the world needs.
Can we do that
Yeah.
chart real quick? Because I
Yeah.
think this is
Throw it-
important. So
Throw it up.
this is the snapshots of wealth over time from the Survey of Consumer Finances, the Federal Reserve. I've broken this into the levels, right? So the level 1, less than 10K, level 2, et cetera. And what you can see, that bottom dark blue in level 4, that's the big story here, which is in 1989, which is the first bar, it was 7% of US households. And by the way, this is inflation adjusted wealth. So this has already been adjusted for inflation. In 1989, that's 7% of households. Today, it's 18% of
It's the
households.
stock market.
It's stock market, home prices, a lot of different things have contributed to that. There's just more wealth than ever before,
I think it's
right?
not just stock market though. It's compensation.
home equity, compensation.
But
all
also
of it.
level
Compensation
1
being
is
in stock market
level 1 is
form.
shrinking.
Yeah, level 1 was 25%. Now it's about 20%. So that, like, the poorest part of society is much smaller. And this is, once again, this is inflation adjusted wealth. And so those are shrinking, and there's more, in the upper middle class, as I call it, 1 to 10 million, which is supposed to be location agnostic. Obviously, if you have like $8 million and you're in Alabama, you're definitely upper class. But like I was trying to say, even in New York City, like I'm trying to be location agnostic here. I think this is the big story here because there's more people in that bottom bucket, and that's creating a lot of competition for these resources. I wrote about this recently.
And for stocks.
Yeah, I mean, for stocks, I mean, house prices, as I said, the Amex Lounge is overrun right now. It's crazy. Like you go, there's lines to get in there. There's more people with these cards than ever before. I think the upper middle class is going through an existential crisis, and I think we're going to see this play out over the next few years.
Right. The system is not built for this much affluence, this many people experiencing affluence. Everything is buckling. There are no more VIP experiences because everyone's a VIP.
It's turned the travel rewards and the credit card rewards business on its head. If you watch what the airlines are doing with reward points, it's not what it's worth.
On the Amex call, all they asked about, they're like, sorry to keep belaboring the point, but it was all about competition with cards and rewards.
Yep, it's a new game.
Agreed. All right, guys, did you have fun on the show today?
Loved it.
I got to tell you, you're two of my favorite people to talk to. This is just a dream episode for me.
Thank you,
deck,
Caleb.
the book. I'm so proud of you. Investopedia. So proud of you coming out with your newest book. This is just an awesome time to have you guys. So I want to just say thank you so much for being here. We end the show by asking people what they're looking forward to. So obviously, I know selling 1 million books is it's on the list for you.
My honeymoon. We're going south of France.
So tell me what you're doing.
We're going Nice for 4 nights and then 3 nights in Paris, and then we'll be back. So.
Oh, that's a sick trip.
Yeah.
Well, what do you do? What do you do in Nice's beaches, right?
Yeah, we do a little bit of that. You'll go to Monaco. You can go down to Saint-Tropez. There's a bunch of different stuff you can.
Now,
see around.
Monaco or Monaco? Shout out to Howard.
Monaco. Yeah,
all right.
We'll call it that.
Now, famously, your wife is a renowned lover. You shared with us. So is 4 nights in Nice enough?
This is a great question.
All right. We'll ask her.
We'll do after we turn off the.
Yeah, maybe we'll have you back on after the honeymoon.
We'll have her come on and we'll
get into that. Her. What are you looking forward to, Caleb?
I'm looking forward to pictures from Nick's honeymoon. Beyond that, again, I'm trying to arrange a university tour for Investopedia, take us back to school.
Where do you want to go?
To some of the biggest schools throughout the country, especially those.
In the process of planning this?
In the process of planning it, looking for partners that want to be a part of it. But I have this dream of making us a real part of young people's complete education because I don't think they're getting it. So that's one big deal. But also Future Proof's coming up. Yeah. Shout out to that. We're going to have some real fun there. Got some great panels coming up. And
we're thrilled to have you guys there.
It's really an honor for us, and this has been an honor too. But right when I'm out of here, I'm on my way home to New Mexico to see the parents and see some old friends. So I will be in the land of enchantment when this airs.
Good for you, Caleb. Thank you so much for being here. We really appreciate it. Michael, what are you looking forward to, my friend?
Visiting day.
Oh shit, that's what I should say too, right? Our kids are at summer camp.
Oh, nice.
They're at sleepaway camp, and this is the 3rd weekend, which is when you go up and see them and bring them. Cool. Bring them food. What do you got? What do you have to bring him? What's the snack list that
Robin's.
he asked for?
She's not like a big eater, so I don't know.
He doesn't care really.
Not a huge eater.
I think the Nugget wants me to bring him a porterhouse from Peter Luger's.
Stop.
Yeah.
Oh, wow.
I think so. No, I bring him like an Italian hero. He's thrilled. They're not babies anymore. They're not asking for candy.
Oh, Smith Street Deli.
Again, it's the only deli that's open on time. For
I know.
Me to
I
hit
asked
the road.
Shari. My hero. She said no, it's closed.
It's closed. Yeah, so we'll hit the deli. We'll hook them up. All right, guys, it's been a pleasure. Hey, shout out to all the listeners, all the viewers. We appreciate you guys. Thank you so much for coming to tune in. Please make sure you check out Of Dollars and Data, which is Nick Maggiulli's blog. Buy his new book, The Wealth Ladder, at fine booksellers everywhere. Check out my friend Caleb Silver's website, Investopedia, and make it. What the f*** are you going?
He's gone. He's already leaving.
Date? All right. Visiting day's tomorrow, right? All right, see you later. God, can you imagine?
He's going to buy some Opendoor.
A podcast.
He's going to buy some Opendoor, I think.
What's funny is this is our 201st show. Like he knows how this is supposed to end. I've lost my train of thought. Good night. Goodbye.
Thank you. Thanks for having us on.
Thank you.